Hello, fellow crypto market enthusiasts. Thank you for joining me. Today we are going to be talking about a couple different things. But what I'm going to start off with is just quickly going over order book depth and, the insights you can and can't get from it and, what it's saying today. And essentially, what you're going to be able to take away from this is the fact that, there are insights you can get from this, but to the same degree and token, it can be spoofed. And what you see here is these two waves or curves going up the right and the left. Obviously, the right being, a lot higher than the left, and it being red. What it's telling you is there's more sellers or sell limit orders in than there are sell limit orders, or I'm sorry, buy limit orders in this section of the market. I love that good coffee. Anyway, so and what you see is somewhat smooth curve and then a large jump, and those two jumps, one where it's between the low hundreds and 200, and then the high 300s to above 400 and to like 450. Those are at price of 59,000 to 59,500. Now, what you'll end up having happen is somebody will come in, put in this huge sell order, and then it will distort the order book depth, and it will create the perception of negative market out there, and it'll ensue, I want to say panic, but a perception of the market. Create a perception of the market that is otherwise not true, because these people, when you put in the limit order, yes, you can actually go out there and put one in, but you could also put one in without any intention of ever actually completing it. And, before the price in the market ever gets to there, cancel the limit order, and then all of a sudden, you didn't actually go through with it. Now, they will, if they do that, it would, kind of create a little bit of it's not the same thing as a short squeeze, but, it would change things in such a way that you would just get some, inverse positive reaction to the price. But if you can, get the market to look negative enough, you can actually get it to, sell off, and then you cancel the limit order. And once it's, a good amount away from where the actual market price is, and it has no impact, then you actually got the price of the market to move down. And you can do it where you have, Bitcoin that they're going to put out there to sell, and then they're going to have, an order to buy down, and then you put in those, big limit orders for selling. It pushes it down. You complete your buy. You got it at a cheaper price, and then you take those sell orders off, and you watch the price of Bitcoin rise. But this is all manipulation, and it's something that a lot of people in the cryptocurrency market complain about, and a lot of people use as a reason why they don't want to get into the cryptocurrency market. Excuse me. But with that problem, out there, it's actually illegal to manipulate a market like this. But, with that being said, it happens, and it happens in a number of different asset classes where, the assets are traded in such a way. I know it definitely happens in stocks and, in a number of other places. So that's the reason why, you need to take this with a grain of salt. And the best way, and probably the only way to actually be able to interpret this for any kind of useful insight is, relatively speaking, the last time we were at this price, what did it look like? What does it look like today? And, obviously if the ratio is better in your favor, it's, instead of 5 to 2 here, let's say it was 5 to 3, and now it's 5 to 2. Well, obviously we're worse, relatively speaking. There might be people spoofing, whatever, all things equal, you see it's in relatively worse position. If we were at, let's say 2 to 3 or 2 to 4 and last time we were at 2 to 5, then you're in a relatively better position. So it always has to be, you know, relatively speaking. This as a standalone needs to be taken with a grain of salt. I can tell you this is what it looked like at 58,000 the last time we were at 58,000, and we dropped off, and then we came back, and we looked better at 58,000. Now we're starting to see this at 58,500, and, you know, it seems to be a challenge. So I'm going to jump into the charts, and one thing I want to say about where the price of Bitcoin is going in the short term, it's going higher. In my opinion, we're definitely going higher, and I sometimes speak about Bitcoin and it going higher in such a way of confidence that it's like, you know, we're just going to explode and, you know, go up 59% and, you know, it's all going to happen in one day and it's going to be insane. No, it's going to be a battle. We're going to have to battle to get to it. That's typically what happens. You don't typically, you know, after all the price action that's happened in Bitcoin, just, you know, at this moment in time and where we are right now, just shoot higher. It's going to be a battle. It's going to be a struggle to get to 60,000, which has been a ceiling. It's tried to break through, you know, and has failed a number of times. Yet, there are a lot of positive technical indicators. The fundamentals just it can't get any better. I mean, and I think that, and then it does get better. And it just keeps getting, you know, better and better and better. So, you know, the fundamentals are not easing up. They're as bullish as they've ever been and getting more bullish. And technical analysis is starting to, you know, come along to, you know, match that thesis. And that just means we're getting, you know, more and more support behind the fact that higher prices are coming and in the very near future. With that being said, though, it is going to be a battle to 60,000. It's not going to be easy, but, you know, we are going to get there, and it's going to happen. Now, one thing I do want to bring up is a weekly chart, and people, you know, saying that we're going to have a sell-off and it's going to go down to 40,000. And I had a previous video that just really, you know, pointed out why that was just not plausible. And this takes you all the way back to 2016, and it's a weekly chart, and the red line, I messed this up before and had to restart a video and it sucked, but it is what it is. But anyway, the red line is just looking at something here. Okay, so the red line is your 50-day moving average, and the blue line is your, what is it? It is your 50-week moving average. And pretty much the takeaway should be that, you know, the red line has always hugged our what is it? Yeah. Okay. So I was just thinking about something. Sorry, everybody. So the red line has always hugged us in terms of a rally, and in the last bull market, we saw I mean, once we broke to a new all-time high, we went underneath it twice, but then that was quickly bought and we got back above, and then we rallied higher. And the blue line is something that we never came close to. The 50-week moving average is something that we never came close to, and we're probably never going to come close to again this time and this go around. So, you know, that is something to be very, you know, cognizant of and, you know, just aware of. And pretty much the insight that, you know, I end up taking away from that is the fact that the 50-day moving average is literally at 54,000. So we're very, very close to it, and it's going to provide support, and it's going to continue to provide support. And if we went down to 40,000, it would probably be what you saw in, you know, late June, early July back in 2017, where, yeah, we went down, but a week later we were back up, and it insane, that, drop in over a 2 week span, that kind of volatility. But, we came back up and then we went higher. But there's differences in between last time and now. Now, yes, we obviously the pace at which we have gone since breaking out to a new all-time high, it somewhat resembles what previously happened. And then all of a sudden, you kind of see history repeating itself, in which case we're going to have this huge sell-off. However, there's an issue with that. And in my previous video, and I'm going to talk about it further right now, is the fact that we have a different market today than last time. And we have a different market for a variety of reasons. But what you need to realize is we've shifted gears, and you can see that at the bottom there's the black 04 January 2021, and that's the beginning. And from about October throughout the end of the year, you saw that very, very high angled increase where it was just pretty much either go up or maybe for a week take a break, but then just go up. And then we got into the new year, and then we had a sell-off, and then went up, and then we had a sell-off, and then went up, and now we're selling, and we're moving sideways and moving slowly. And I believe we have really shifted gears. And the reason why we have shifted gears, and the reason why we're not going to have the same kind of sell-off and panic selling that you saw back in 2017 in the summer there, where you had this massive drop and then a rebound, is because the market's becoming less emotional. The composition of the people making up this market are becoming less emotional. You're not going to see 300 billion, 400 billion sucked out of the market and then just flow right back in a week later. And there's a couple reasons as to why you're not going to see that. But, we'll get into this and talk about it in a little more detail. But we're really going to zoom to it. Sorry. This is not going to be perfect, but whatever, it is what it is. I'm not redoing this again. I've already done this a couple times. So sorry about shooting that around. Anyway, so, you saw, the first week of June and the second, or July, and the second week of July. This is the 2017 bull market run. And essentially what you end up seeing is that 50-day moving average, we hugged it. We really did hug it. And that is something that we're going to continue to hug in this bull market. And those are the kinds of things that hold true. Yeah, there's going to be some differences, but there's also going to be some things that, just stay the same. And one of the things that, you look at anything, whether it's a stock or, what we're looking at here, Bitcoin, or a number of other things, you're going to see certain things like moving averages and whatnot. Those things hold true and pretty much constant. And I mean, it's not going to hold true where, across multiple different assets, in different ways. But, what the moving average is telling you is something about the asset you're looking at. And it will tell you something about the asset you're looking at. And then you have to think about that. And then this is all technical. And then you have to match it with fundamental of that asset you're, looking at. If you see a sharp incline in, let's say Caterpillar, right? And it's doing something similar to Bitcoin. Well, you can't say, oh well, Bitcoin did this, and we saw that incline, and that just it ended up taking off and went up 200 more percent from that point. So let's do that for Caterpillar, the stock. No, you have to understand why it's making the move it's making, why it's doing what it's doing. And, just because you get that kind of angle in a moving average doesn't mean that it will continue in a similar way as to what we saw in Bitcoin. They're completely different, assets you're looking at there. So you need to keep that in mind. But the other fact is, a 50-day moving average will provide support. It will provide support in Bitcoin sense, wherever the price is moving and however fast it's moving and whatever, pace it's moving at to there. And it will provide support in the case of Caterpillar. Now, will it always provide support? Well, no. You see, obviously, at the peak, we broke down below it. And eventually, once you break it, once you break that support, it breaks hard. So you need to, be definitely aware of that. However, in the most recent bull market, it was always a buying opportunity, and we bounced off it, and we bounced off it well. But here's one thing I want everybody to realize. Once you broke to all-time new highs, what you see is in late June to early July, we sold off. That was about a 4-week period, 1 month. And then, from when the breakout was in April, you went a couple months, April, May, June, and then you sold off for a month. And then we went July, August to September. And then September we sold off for a couple weeks. And then we went up, and we got into November, and we had a bad week in November, and then we just continued upward, and you ended up hitting the peak. Now that's every single pullback shortened and compressed, and you had months in between pullbacks, and in between the pullbacks, the price of Bitcoin actually accelerated the pace at which it was increasing and going higher, which is just incredible. Now let's go to what we've seen here, and we broke out to all-time new highs. And then in a similar fashion, we had a couple good months there from October, November, December, which were fantastic. But the difference is we didn't sell off for the beginning of January for a couple weeks, and then go higher, and then continue higher for 2 months, 2.5 months, or whatnot. We went higher for 3 weeks, and then we sold off for a week, and then we went higher for 2 more weeks, and now we've sold off again, and now we're just moving sideways. So it's very sideways movement. You don't see that. Like, once again, let's go back to the other previous chart in the previous bull market. Yes, I mean, if you want to say this is similar to the start of the last bull market, I guess you could draw that conclusion. And then you said there's, this huge drop and whatnot, and so on and so forth. But it actually is different. That took the course of a month. And you're now seeing this, choppy waters and, now sideways. We've been moving sideways for about a month and a half. And we're now, making our way well into 2 months of sideways movement, which is twice as long as the previous. If you were to actually go back, look at 2017, after we hit that high, after we broke to all-time new highs, we were momentum moving higher, and we were moving higher already by that point 2 months later. And we don't have that same decisiveness as compared to the last time here. And, we also have had a pullback and a pullback and a pullback. So that's the whole entire point I'm trying to make, is this time is different. And the fact that, people are going to say we're going to have a Head and Shoulders, a big one complete, and we're going to go down to 40,000 and retest it, it does not make sense. And if we do, we won't be there for long. But we're not going to get there. And I'll play a video telling you why we won't get there. But we're not going to get there. The one thing I do want to point out is we're going to be getting into a more of a stair step, 45-degree angle, beautifully higher. And what you see is from October to December, we broke out to all-time new highs, and then a bunch of retail investors got in there. And that's what retail investing, looks like. Is very emotional, buy, 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 and then a massive sell-off, and then buy, 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 and then whatnot. That is not going to happen. You have now institutional investors in, and we'll just hop right into it because this is going to be more enjoyable and fun. But, this is how they buy.
Bitcoin, right? You have anxiety about being short. Once you understand it.
Completely terrified of not having enough.
And if that's the case, then if you're running $10 billion of money, you go take $1 or $2 billion of it, or 3, or you just buy it all. Like, I mean, don't you sit around? I sit around, I'm trading this Bitcoin, Raul, and to buy this much, you can't buy it in a minute or an hour. You can't even buy it in a day. When I'm in the market, I'm buying Bitcoin 4 days in a row, every minute.
Are you doing it yourself? Giving it to anybody else?
I control it all. But yeah, yeah. If it's worth doing, do it yourself.
So clearly, Michael has a lot of time on his hand. First of all, and second of all, like, do I ever sit back and think about the billions I have and buying? Unfortunately, not yet. I don't, but he is a very interesting character. And then, the crazy thing is, he makes it seem like, it's some kind of example he's putting out there. But then later on, he reiterates, and actually it seems like he literally, as a CEO, which I find is incredible, he's talking about round the clock because Bitcoin's 24 hours. So he's like, I'm going to be there controlling it all. I'm going to be buying, for 4 days straight. And, I got my coffee, I got my Red Bull stacked, six pallets high, 6 cases high. And, here we go. Yeah, no. So the bigger point to take away from that, other than some, funny tongue-in-cheek jabs there, is the fact that institutional investors can't go out there and buy all at once. And, we go back to this order book depth, and, you see a limit order in there. Well, the reason why they put a limit order in is because an order will come in, and you have 70 in there, let's say, to sell in this example, at the 59,000 price level. Well, that's how you do it, because we get to that price, and then all of a sudden, an order comes in to buy 20 at 59,000, and then you go down to 50. And then the computer will continue to wait until it gets more orders for 59,000, and it will go down, and it will sell off your Bitcoin. And the computer does it in a way, in which case it manages it. Because instead, if you were to just say, you know what, I'm going to sell my 70 Bitcoin and do it for market, what it will do is it will end up, you see at the center, we start to go upwards. Well, it will start to complete those orders, and then it will move down to the next order, and then it'll move down further in the next order, because people have them, priced out, and it's in order. The, order book is in order of price, and it'll, if you just do market, it's going to sell it all really quickly. It's going to happen, maybe a couple minutes, but it's going to complete every single order in order and move down. So, right now, at this point in time, the price, mid-market price was 58,501.24. You're not going to get it for that price. What you're going to get it for is actually a lower price, and maybe 58,000. It depends on the order you're putting in there and how many orders are there, limit orders are waiting. But if you're selling, they're going to have to complete maybe 10, 50, 100 limit orders to get rid of your 70 Bitcoin, in which case, what's the average price of that? And when you see crashes in the stock market or anything, people are putting in market orders, and they're going to take, whatever they can get for it, and your average price ends up being lower. But in a bull market or in most other circumstances, even in, market declines, heavy market declines, people don't do it that way, because you end up getting, a lower price when it's otherwise not necessary. You could just put a limit order in there, we get to it, we take care of it, and so on and so forth, and then, you move forward. And it happens the same way with buying. You could do that with buying, and as it comes back and so on and so forth, then it buys a little bit more, and then it buys a little bit more, and then it buys a little bit more, and then you know the price you got it for and whatnot, instead of buying, and the inverse happening, instead of buying it for 58,501, you end up buying it, for $59,000, $500 more than you otherwise would have needed to. So, that's why he's talking about him being in there. But that's the difference. That's the market difference. The last bull market in 2017 was based off of retail investors, and they're not going in there and doing limit orders. I mean, yes, there are plenty of retail investors that will do limit orders, but, once again, this is not the same in terms of how these things operate and these, institutional investors operate. They're very, very, way more strategic. And I actually have a warning to old whales, old Bitcoin whales, that, they need to be careful, because this is what is coming. And yesterday I said in my video that, you were going to end up seeing there be an issue, in which case old Bitcoin whales were going to play the same tricks, try and manipulate the market, sell off massively, even get rid of their coins, not just try and spoof an order book, but actually sell their coins into the market, and then create a panic. And I think that's a lot of what has happened here. When we got to 60,000, they were hoping to go back to 40,000, and now they're trying to complete a head and shoulders. So you saw a lot of selling off, and then we did see a sharp decline downwards in terms of whales coming through and liquidating. However, there's a problem. We're not going to go down to 40,000, and this is the reason why we're not going to go down to 40,000.
So look, I want to ask you two questions.
Yeah.
The practicalities, right? So there is the terrifying moment when you transfer your Bitcoin from the exchange to your hard wallet, and you're like, fuck, I hope I put in the right numbers. There is nobody I can call up at the bank and say, oh, I made a mistake in the transfer. Did you not get the terror of doing that? And how do you store it?
Okay, well, so a couple of points I'll make. One point, I can't give you too much details about how we do it and how we handle our crypto, just for security reasons.
Obviously.
Right? I mean, in private, off the record, we talk about it, but in public, I can't. Generally, our approach is to work with institutional grade crypto exchanges and institutional grade crypto custodians, and then, like handling nitroglycerin, handle it very carefully, right? I handle my crypto very carefully, and that means that before we're whitelisting everything every which way, and I'm moving 0.01 Bitcoin before I move anything material, right? And the first time it took me like 60 minutes or 90 minutes to get a confirm, man. It's like, I'm working on it. But let me make the next point, which is, if you want to trade this stuff, you need a great team of like over-the-counter brokers you work with, and they have to have great technology, because you're going to buy this thing in 89,000 small bites of 0.2 Bitcoin each. If I'm in the market, you don't know I'm in the market, right? Like I get a laugh when I watch people come in and hammer the price up by $100, and people are thinking, is that some whale? Is that if you wanted to buy $100 million of it, there's no way you're chasing it up $100. So I'm waiting for someone to panic, at which point I'm going to buy $10 million in 1 minute, why they think they're getting the better of me, right?
So exactly. So what you see are these pullbacks, and then what I've said even more recently, and you don't see it on this chart, but what you are seeing recently is 3 higher lows. We put in a low, but it was higher than the last. And we put in another low, and it was higher than the last. And what you're seeing happen in the price, and what's actually happening in the market, is supply is being constricted. There's less frothing around. We got up to 58,000. A lot of Bitcoin whales came in. They sold off. The price went down. They probably bought back in. Or there was some buying back in at a lower price. They did that, and then they thought maybe they could, do it again. And then, you had institutional investors come in, and then, it came up again, and then it got greedy, and then they sold off again. But it worked, and then we sold off again. However, we quickly regained that, sucked it back up, and now they're thinking, well, we can make a head and shoulders pattern, and once we get a head and shoulders pattern in there, it's going to, create a lot of fear and anxiety, and that's how we could push it down to 40,000. So then it sold off. But as I was saying for a number of days, and I was telling a lot of people, I don't think this is happening. It doesn't make sense with the fundamentals. You're not going to go down to 40,000. Volatility is coming in, and we're going to get to volatility again in a moment. And that's what volatility is telling you, is this is not going to happen the way a lot of people who are writing articles and a lot of Bitcoin whales, are talking about, and starting to make people believe they're actually probably going to get bit. And they sold in. Then it seems there was a lot of selling, and then what ended up coming, a lot of buying. And that's because of what Michael Saylor and a lot of other institutional investors do. They just bide their time and wait, and create stair steps. you're going to start to see similar pattern in Bitcoin as you see in stocks, and it will still outpace things. It'll still be incredible moves, and you'll still have relatively, in my opinion, more volatility in the stock market, even though he's going to say it's less volatile than some stocks out there. But what you're going to have to start to realize is these people are buying, and then Michael Saylor is not buying to go out there and trade and mess around and whatnot. He's going out there to actually hodl it. And not just that, but the other thing you have to realize is he said he has teams, and he's buying it in 89,000 tiny little bytes, and he's making a bunch of purchases. So he has a team out there. He has a bunch of people working on this. It's very methodical. It's very operational. There's a lot to it. So you're not going to have that same kind of retail investor parabolic jump and crash. So we're not going to crash down to 40,000. Those things are not going to happen. We're going to see some more methodical moves. And that's why I said, we've shifted gears in Bitcoin. And I may be the only person saying it right now, but we have shifted gears in Bitcoin. And it's downshifted, but that's not a bad thing. It's, it's a natural thing. It was going to happen at some point, and it's happening, and it's perfectly fine. It doesn't mean the price can't move higher, but what it means is we're going to have a more of a 45-degree angle as opposed to a parabolic move higher. Does that mean that, $400-500 million is off the table? No, we could still get there into the future. But, what it does mean is you're not going to, see us drop down to 40,000 in, late May and then all of a sudden shoot up to 100,000, by June and whatnot. You're just not going to see that happen. But what you are going to see, though, is continued, as we sell off, there are buyers. Make no mistake, there are buyers. Sovereign wealth funds are interested in this. Financial advisors are interested in this, and they're advising clients. Companies are interested in this, and they're looking to actually get into this. So, you need to realize the fact that there are buyers in this market. And that's why we ended up making our third higher low. That is why you actually are seeing an upward wedge, which, we could break down. We could still go higher and then break the wedge in a bearish way, go down, and then retest levels. And that actually probably makes the most sense in what's going to happen. And I'll talk more about that, next week in terms of where I think the price is going to go. But we have actually created, we're in an upward wedge, so the price has room to run higher. We've created an inverse head and shoulders, in which case that is bullish for the price. And as you can see here, and as I showed you with the previous bull market and this bull market, and it will continue to hold true, we have the 50-day moving average as support. So we have a trend line supporting, we have Fibonacci sequence line supporting, we have the 50-day moving average supporting, and if you actually look at stocks and the indexes, the 50-day moving average is a very, very strong support for the actual stock market. And then you go out to 100 and 200, but it is very, very strong support for it. So you usually do not go underneath it, and if you do, that's typically a buying opportunity in a bull market. And right now, yes, could we actually go lower? We could, but we bounced off the 50-day moving average multiple times. The pace has come down, the volatility has come down, and like I said yesterday, we're going to. If you're proposing we're going down to 40,000, essentially what you're saying is, that's 30% pullbacks in essentially 4 months. So, let's look at what we did in 2017. Did we have, 3 pullbacks in 4 or 3 months? No, you had one in June that ended in the first week of July. You had one in September, so you had August in between there, but then you ended up going out to November. So that was 3 pullbacks in 6 months, not 3 pullbacks in 4 months, and they weren't the same length and degree. You had one that was 4 weeks, and then you went to 3 weeks, and then you went to 1 week. So it wasn't even for a month, and what you see here, with what we've currently had is 3 weeks, and then we had a week, but then we never got higher than that. So we're not even out of the second pullback we had here. We've moved sideways for about a month and a half, and now we're getting very close to moving sideways for 2 months, in which case, during the previous bull market, you didn't see us do that. Now, I'm trying to say, okay, we're going to downgrade, downshift, but, this didn't happen last time and whatnot. Well, people are expecting a massive pullback. I'm saying we're moving slower. So you're not going to have that same volatility. You're not going to have that same pullback. And we've already pulled back enough. And you didn't see this happen last time, but last time you had 40% pullbacks, but we're not moving at the same pace. So, this is what's happening. This is, the current situation we're in, and we're not going to see a 33% pullback. It doesn't make sense. It didn't happen last time, and it could have happened last time. There's more likely for it to happen last time because of the pace at which we were moving. We had a pullback, and then we would go a lot higher, and it would be over the course of 2 months, and then we'd have a sharp pullback, then we'd go a lot higher, and it'd be over the course of 2 months, and we'd have more time in between. We've pulled back way too many times, and not moved higher enough for this to be plausible. So we're not going to 40,000. So if we're not going to 40,000, well, we're going to go to 50,000, complete the head and shoulders. I guess we could go to 50,000 and complete the head and shoulders pattern, but usually a head and shoulders pattern, when it completes, doesn't then just bounce off of that and you go higher. When you complete a head and shoulders, usually you go lower. So we're going to complete the head and shoulders, but not go lower. We're going to complete a bearish pattern, but then bounce off of that and go higher. I mean, is it possible? Yeah, but no. You have patterns complete, and then it indicates where the price is going after the pattern's completed. So if we're going to have a big head and shoulders, it's not just going to 50,000. We're going to 40,000. But I've already said that's not, reasonable. So if we're not going to 40,000, then why would we complete the head and shoulders? Oh, wait, we're probably not going to complete the head and shoulders, so we're not going to 50,000. And with what Michael Saylor said, how he buys is he waits. So yeah, maybe he's not going to be in there buying at 58,000, even though he did buy at 58,000 a couple days ago, 10 or 15 million more dollars worth of Bitcoin. But no, they are waiting for pullbacks. And now we're essentially at a point where we've had 3 higher lows and we're starting to push against the ceiling. So what ends up happening and what gets you above these kinds of pressure points is bears start to get concerned. They start to close out positions, but that ends up being shorts closing and deciding, hey, I'm not going to take the chance of losing it. I've not really made any money on my trade. I'm going to sell out. So that creates buying. But then the other thing is, okay, this may be my last chance to get this, whatever it is, stock, Bitcoin, whatever it is, underneath this price. And once that mindset starts to happen, in which case I think it's reasonable, where you look at a chart and we're getting closer and closer and closer to a key resistance level, and the fundamentals are great, and it just makes this really great impression that we're going to break through it. We keep getting closer, the pullbacks are weaker, we're making higher lows. So ultimately, this points you into the direction that the reason you buy at an all-time high is because you don't think we're going to be back at this point again. And then you buy, and then people short squeeze and ends up ultimately breaking through it. But, let's talk about volatility, and you'll see we've downshifted, and Michael Saylor actually points it out very well.
And then my last point is, while I'm sitting there for all those days and I'm trading this stuff, and I'm like day and night, right? Day and night trading it. Everybody thinks, well, Bitcoin's too volatile. When people like me or these other institutions get into it, we've got computer programs that are trying to buy it every minute of the day, day and night. And pretty soon, there'll be one set of computer programs talking to another set of computer programs.
Volatility comes
There's
down.
no people involved, right? There's no people involved, and the volatility is collapsing, right? It's already collapsing. Anybody that's watched this stuff over the past 3 months, you would see the volatility is coming in. The other day, I'm watching it. Bitcoin's less volatile than Apple. It's definitely less volatile than It's less volatile than Amazon, less volatile than all the big tech companies. That's a story. The last point, it's like, who are these people that are selling it to me? Like, I can't believe someone is willing to sell it to me. But I'm thanking my lucky stars. I'm like, hit me again, hit me again, hit me again.
So there's his, view on it. I mean, yes, volatility is coming in. He is seeing the downshift. A lot of people have seen the downshift. As institutional investors come in, it's more methodical. You hear about the teams. You hear about how they buy. They're going to make a bunch of small purchases. They're not going to be a whale. They're not going to, expose their hand. They're going to, wait for opportunities. They have more patience because they have no emotion. They have systems. They have computers built up. Bitcoin whales are not the same. These people who accumulated a lot of Bitcoin, unless they're a hodler and they're not going to sell, if they're coming into the market and they're trying to trade and they're trying to get greedy and get more BTC and increase that balance of maybe they'll be able to do it. But a lot of them are going to get burned. And I guarantee a lot of this manipulation is going to go down for, to a certain extent. Does Goldman Sachs and a bunch of other big banks and investment firms and so on and so forth manipulate? Absolutely. But essentially what he's saying is this trend will hold absolutely true. You're going to see emotion come out. You're going to see volatility go down. And volatility is what is needed for Bitcoin whales or traders or anybody to be successful. When the market isn't volatile, it's much harder to make the kind of money that makes doing what you're doing worth it. When you're able to have more emotion, which is from retail investors, which is creates volatility, it makes it easier for Bitcoin whales to do what they do. So essentially, what I think a lot of Bitcoin whales will probably end up doing is moving into futures and options markets and moving away and out of the actual cryptocurrency market and underlying asset, and you're going to see volatility come in and you're going to see it become less volatile, and we're going to stair step higher, which is going to be a very pleasant and beautiful experience to be a part of. But with that said, those are the things happening in the cryptocurrency market, and it's essentially why we're not going to go lower. We're probably not going to zoom higher and go insanely higher, but we are going to break through 60,000. We are going to end up getting to 70 to 80,000, and then we're probably going to have a pullback, and we're going to break the upward wedge downward. Excuse me, and then we're going to probably hit into the $60,000 to $65,000 range, but then we're going to bounce off of there because institutional investors are going to be buying the dip. So my recommendation to people, even though I'm not a financial advisor, is, how I do it. And I'll tell you how I do it. And whether you want to do this or do something else, you do your research, you figure out what's best for you. But I buy the dips. I have a Nextos account. And, I'm looking into it. I know there's Coinbase is making a card and a number of others. So I'm going to be looking around, but essentially, you're going to be able to use a card to borrow against your crypto. So you're going to have your crypto, you're not going to have to exchange it, so you're not going to have to incur any tax liabilities, and you're going to be borrowing against it and paying back, essentially debts, but, you be reasonable, you be responsible, you just use it in a responsible way, and you pay it back. And then you don't have to have the transactions that create capital gains taxes for you, and you're able to invest. And then the other thing you do is you buy the dips. And it just makes it very easy, and then you just ride the wave out. And we're still going to see Bitcoin outperform other assets. Just because we're not going to get 400% compounded annual growth rate or 200% compounded annual growth rate moving forward doesn't mean we're not going to still see 100% compounded annual growth rate, which would be incredible, and even 50% compounded annual growth rate would be incredible still as well. That would be still the best returning stock, and that's going to continue onwards as we move forward. So yes, we have a long way to go in this market. You have to be patient, but you also have to realize that, there is support. There are buyers. You're not going to see them as clearly. And Michael Saylor is saying, he's not going to make it completely obvious that he's in the market. You're pretty much not going to know that these institutional investors are in the market and doing all these different things and, there. But what you have to understand and realize is they are there, they are buying, and that's why you're seeing it reflected in the price. But that is all for today, everybody. Have a wonderful rest of your day and enjoy your weekend.